Welcome to today's Explainer. We're diving into a really fascinating setup on the long-term price chart for Biodesix, trading under the ticker symbol BDSX. After a pretty massive correction, we're finally starting to see what analysts like to call green shoots of a fresh recovery. The stock is actually starting to move higher, which is sparking some serious curiosity. But as you'll see, navigating a recovery like this requires a really solid map to avoid all the hidden traps along the way. So, we're going to break down the exact technical levels you need to know and figure out what this upward momentum actually means for the stock's future. Let's get right into it.
But hey, before we get all starry-eyed about the upside, we have to talk about the elephant in the room, an 80 to 90% crash risk. If you trade the pharma and healthcare sectors, you already know the drill. It is wildly, unbelievably volatile. You absolutely must respect this downside risk before you even think about calculating your upside. I mean, a single unexpected trial result, a sudden regulatory hurdle, or a missed earnings report can literally pull the floor right out from under you. If bad news hits, a rapid, devastating crash is just a reality of the terrain. So any analysis of this recovery has to be grounded in a very healthy respect for that immense volatility.
Because of that volatility, you're basically constantly guarding against a trifecta of dangers. It's a real balancing act. First up, you have fundamental risk. That's your underlying business metrics and financials. If those weaken, the stock suffers, for sure. Second is technical risk. Even if the business itself seems totally fine, losing key support levels on the chart can unleash overwhelming selling pressure. And third, news risk. This is the ultimate wild card in the healthcare sector. The market's extreme sensitivity to sudden announcements can completely bypass fundamental and technical logic, sending the stock into an absolute tailspin. You really have to keep all three of these in mind as we evaluate the current setup.
Okay, let's dive into this. Section 1, the active trading range, mapping the immediate levels. Let's look at exactly where the stock is trading right now and define the boundaries of its current movement.
Right now, BDSX is boxed into a very strict recovery range. The base of support is firmly set at 1113. Just below that is your hard boundary, your stop loss, sitting right at 974 or 975. That is exactly where this whole technical recovery just fails. Now, moving upward, the stock faces immediate resistance at 1988, and the target for this active range sits right around 25.90 or 26 bucks. The absolute most important takeaway here is that despite those early green shoots we talked about, the recovery is strictly limited to this specific zone right now. This is the active box. Until the price tells us otherwise, this is the only map that matters.
Moving on to Section 2, the next big swing, beyond the 26 barrier. So what happens if Biodesix actually manages to conquer that immediate active range? Well, moving beyond that 26 target requires a confirmed, undeniable breakout. It's definitely not going to happen on just casual momentum.
Let's move to and see how this builds. If that breakout actually occurs, we're looking at a clear, three-step pathway. Step 1 is the absolute prerequisite. The stock has to start trading and, crucially, sustaining at or above that 26 level. It can't just poke its head up and fall right back down. It has to hold that ground. If it manages that, Step 2 activates, potentially pushing the stock all the way up to the 45 mark. And if the momentum holds strong, Step 3 brings the price all the way up to the 62 to 63 level. It's like a massive ladder, but every single rung depends entirely on successfully holding the level right below it.
Section 3, the ultimate breakout level, unlocking macro potential. So the crucial point here is that we've mapped the climb from the 11s up to the 60s, but there is absolutely 0 point projecting anything beyond 63 right now, unless a massive breakout technically occurs. That 63 level acts as an enormous ceiling on the chart.
Now, what's really interesting about this slide is the sheer scale of what happens if that ceiling shatters. If BDSX secures a major breakout beyond that 63 level, the entire macro range wakes up. We are no longer talking about small, incremental swings anymore. A 10-time move opens up beyond that mark. 10 times. It is an incredible display of macro potential, but, and this is a big but, it remains entirely locked behind that crucial barrier. Without that breakout, the macro chart stays fast asleep.
So what does this all mean? It leaves us with one massive question. Will Biodesix smash through that monumental 63 ceiling and unlock an incredible 10-time move? Or will it just succumb to sector volatility, news sensitivity, and fundamental risks, bringing on that 80 to 90% crash? The map is drawn, the technical levels are firmly set, from the stop loss at 9.74 all the way up to that macro ceiling at 63. Now, we just get to sit back and watch how the market plays it. Thanks so much for joining me for this explainer, and I'll see you next time.